Hi, I'm Keith Schaefer. I'm a full-time energy investor and editor of the Oil and Gas Investments Bulletin. Today I'm going to go over the main energy themes of 2018 as I saw them. Sadly, none of them are bullish, but here is what they were. In 2018, I think the big theme for energy investors was that commodity prices actually did pretty well for most of the year. Oil prices were up anywhere from 25 to 35% depending on whether it was WTI or Brent crude. And even natural gas at the end of the year here has had a fantastic run, up about 30%, maybe even a little bit more. But oil stocks really did nothing, and natural gas stocks have really done nothing lately. And I'll go into that in a minute. The second big theme was that U.S. production surprised everybody, and not by a little bit. Nobody would have believed a year ago that oil production in the United States would be up a full 2 million barrels a day, or that natural gas production would be up 10 BCF a day, 10 billion cubic feet a day increase across the entire nation. And the last, and again, not bullish theme in energy was that all this production has really put a huge discount on North American oil and gas prices here at the end of the year. So pretty well every major basin in the United States and Canada is suffering from a huge discount to benchmark prices. So a benchmark price would be like WTI, which is priced at Cushing, Oklahoma. So let's do this in reverse order. So the discounts in the Permian Basin in West Texas went from 0 early this year to about $20 a barrel less than WTI. The Bakken this year up in North Dakota was trading at $1 premium to WTI most of the year. And then just in the last quarter actually this is November, and just in the last month are we seeing that the Bakken has gone from $1 WTI premium to about a $10 to $13 discount. And you look at the oil sands in Canada, that has been the biggest discount of all this year, where it used to trade around somewhere between $15 a barrel, less than WTI back in March and April. It blew out to $50 a barrel discount. So the same barrel, the same heavy oil barrel in Canada trades for under $20 US a barrel. In fact, I think it hit about as low as $17.50 this year, when that same barrel in the United States at the Gulf Coast was closer to $67 a barrel. That's a $50 barrel of difference. So that obviously really takes away the cash flow from these producers and just makes it very difficult for investors to make money. So why did these differentials in each of the basins blow out? Because U.S. production of hydrocarbons just surpassed everyone's expectations. When the Permian Basin really started to pick up production last year, everyone was thinking, oh, maybe it'll go up 1 million barrels. And some of the industry leaders like Centennial Development's Mark Papa, who used to run EOG, and Continental's CEO Harold Hamm, they all said, oh, don't worry, Permian production isn't really going to get that high. You just wait. There's going to be constraints they're going to fill up all the pipelines. But even with filling up the pipelines, they built other pipelines. They got crude by rail heading up there. And so nobody, not one single person on this planet would have guessed that U.S. production, and I mean in the Permian Basin, in the Eagle Ford, in the Bakken, everywhere, production has grown so much that the U.S. is up a full 2 million barrels a day. And even the United States themselves didn't realize this was possible, and it was just late October when the EIA in the United States put out a huge increase in production that took the market completely by surprise. That really started the waterfall of oil prices that we're seeing here in the last quarter of the year. And natural gas is the same thing. Not only has the mighty Marcellus in Virginia and Pennsylvania gone through the roof with their production with new pipelines, but all the associated gas in the Permian has gone crazy. A few years ago, there was almost no production in West Texas for natural gas. Now, there is almost 8 billion cubic feet a day coming out of the Permian. And that's with no natural gas wells, not one. That's all associated gas with oil wells. So again, theme number 2, U.S. production just gone crazy. And is it any wonder then that the third theme, oil and gas stocks, have done nothing when you see this huge amount of supply coming on the market? Oil and gas stocks had one small run in this year, and that was from April to June. So if you were lucky enough to buy either Canadian heavy oil stocks or the Bakken stocks, those were the only two groups of stocks that did anything this year at all. If you were lucky enough to buy them in March and sell them at the beginning of July, you made money. Otherwise, you didn't. You made no money. In fact, you probably lost money, and you're wondering why that happened when commodity prices have done so well. So really, those are the big energy themes of 2018. And in one of my next videos, I'll tell you what to look for in 2019 to make money in energy. I'm Keith Schaefer.